Welcome to the deep dive. Today we're tackling a really core question about your financial future.
Hmm.
It's about where you should be putting your economic energy. Are we talking about buying a house or maybe investing in Bitcoin, gold,
Oh,
even silver?
right. It's a big one. And to get a handle on it, we've really immersed ourselves in, well, the perspectives of some pretty sharp YouTube channels.
Let's dive in. Maybe start with Bitcoin University and that house versus Bitcoin angle.
Sounds good. So Bitcoin University, Matthew, CUR, he actually starts by tackling a listener question. Someone named Shalin015 asked how to convince his wife that Bitcoin might be a better buy than real estate, especially with the idea that maybe more housing supply is coming down the line.
Okay, so how does he approach that?
Well, he introduces Bitcoin as freedom money. The idea is it's a way to store your economic energy, your work, your time, and hopefully grow it for the future. He makes this point that fundamentally, our time is much scarcer than Bitcoin will ever be.
Time being the ultimate scarce resource. I like that framing. What about the house itself, though? Is he totally against owning property?
Not necessarily, and this is key. He makes a distinction between owning your primary residence, the house you live in, versus investing in property purely for financial gain.
Okay, so like owning your home might be a lifestyle choice.
Exactly. He actually talks about his own situation. He kept his own home, even though he maybe didn't see it as the best investment purely in dollar terms, but it was the right lifestyle choice for him.
But he sold rentals?
Right. He sold his rental properties and put that money into Bitcoin, a move he seems pretty happy with. So it's nuanced.
What are the problems he sees with real estate as an investment?
Well, he gets into quite a few. First, lack of portability. It's stuck where it is.
Right. You can't just pick it up and move it.
And he uses some pretty stark examples like, imagine trying to sell property right now in a conflict zone like Gaza or Kiev. It'd be incredibly difficult, maybe impossible.
Yeah, absolutely.
Then there's the risk to property rights themselves.
Mm.
He mentions issues like squatters, which could be a real headache in some places.
Like California or Colorado, I think he mentioned.
Yeah. And also government interference. Think about during the pandemic, eviction moratoriums. Landlords couldn't collect rent, even if tenants weren't paying.
Which could lead to mortgage defaults if the landlord relies on that income.
Precisely. Then there's illiquidity and just the high cost of trading. Selling a house takes time, months sometimes.
Oh, easily. And the fees.
Huge fees, agent commissions, legal costs, closing costs. It all eats into your return.
Plus the ongoing costs, right? It's not just a one-time purchase.
Definitely not. He calls property taxes an annual government extortion payment. Quite a phrase.
Okay.
Then you've got insurance and the big one, maintenance.
Ugh, maintenance, the leaky roof, the furnace dying.
He calls a house a leaky economic vessel, constantly needing something. Carpets, paint, driveways, roofs. It never ends.
And if you neglect it.
It falls apart.
Yeah.
He uses Detroit as an example of what can happen with widespread neglect. And his point is, people often don't factor these ongoing costs in properly when they think about their investment return.
Especially with inflation, I guess.
That's another crucial point he makes. High inflation can make those maintenance costs just explode. That new roof might cost more than you paid for the whole house years ago, in an extreme scenario.
What about the Bitcoin side then? What are the advantages he highlights?
So on the flip side, Bitcoin is, well, perfectly portable. You can set it anywhere in the world almost instantly.
No moving trucks needed.
Exactly. It's also very difficult to confiscate, unlike a physical house. And crucially, no physical maintenance, no property taxes.
That's a big difference right there.
Huge. And he presents some data looking at the median U.S. home price measured in Bitcoin.
Okay.
And it showed that price falling significantly between, I think it was 2016 and 2024. The implication being Bitcoin appreciated much faster than housing over that period.
Interesting. So Bitcoin potentially growing faster than real estate value?
That's the argument. Now, he does throw in something he calls a risky tip.
Uh-oh. Risky tip.
Yeah, the idea is maybe you take out a larger mortgage than you need for the house itself, and you use the extra cash to buy Bitcoin.
Okay, leveraging your mortgage for Bitcoin. That does sound risky.
It is. The bet is that Bitcoin's appreciation will beat the mortgage interest rate by a wide margin. He notes that, unlike margin loans on stocks, you don't get margin called on your house as long as you make the payments.
But if Bitcoin doesn't outperform or crashes,
you're left with a bigger mortgage payment and potentially losses on the Bitcoin. So, yeah, high risk. He stresses that.
Right. Did he mention anything about like extreme scenarios, societal collapse type stuff?
Briefly. He's sort of touched on the idea that in really chaotic times, maybe things like foreign passports or residencies, or even a remote self-sufficient property like a Bitcoin citadel could be useful alongside just holding Bitcoin.
Backup plans, basically.
Kinda. But ultimately, he really brings it back to the personal level. Says there's no one-size-fits-all answer. It depends on your situation, your family, your relationships.
Makes sense. Shall we pivot to CoinSitter now? The gold versus Bitcoin debate.
Let's do it. So CoinSitter jumps in by looking at gold's recent performance, which has been, well, pretty strong.
Yeah, gold's been moving lately.
Definitely. It broke out of a range it was stuck in for like 10 years. And maybe more importantly, it broke a 35-year downtrend when you compare its price to the money supply.
Wow, 35 years. That's significant.
It is. And it's got people noticing. Even big players like Goldman Sachs are putting out bullish targets for gold, looking out toward the end of 2025.
Are there technical signs supporting that too?
According to CoinSitter, yes. They mentioned it breaking above a 50-year rising wedge pattern on the charts, and also the monthly RSI, that's the relative strength index, a momentum indicator.
Right, measures if something's overbought or oversold.
Exactly. That surged above 70. And historically, they say readings like that for gold have often marked the start of big, long-term bull runs. So technically, the picture looks pretty good for gold right now.
Interesting. What about the bigger picture, the macro environment?
That seems to be favoring gold, too, according to their analysis. A big factor is central bank buying.
Ah, yeah, I've heard about that. China, Russia?
China, Russia, India, Turkey. A lot of central banks have been loading up on gold, especially since the whole situation with the Russia-Ukraine war and the freezing of Russia's dollar assets.
Looking for a neutral reserve asset, maybe? Something outside the dollar system?
That seems to be the idea. Gold as a neutral, reliable store of value. And importantly, CoinSitter points out these same central banks haven't really shown much interest in holding Bitcoin as a reserve asset, at least not yet.
Okay, that's a key difference. What other arguments for gold do they bring up?
Well, there's its history as an inflation hedge. It did well back in the high inflation of the 70s and 80s.
The classic gold bug argument.
Right. And they also mentioned that gold doesn't really face the same kind of technological risks as Bitcoin. Worries about quantum computing, breaking encryption, or changes in mining or network security threats. Gold is just gold.
Physically stable.
Plus, it often acts as a safe haven. They cite some J.P. Morgan analysis showing that during recent trade war scares, investors tended to flee to traditional assets like gold, not so much Bitcoin.
Okay. And volatility. Bitcoin is famously volatile.
Yeah, gold is generally much less volatile, fewer dramatic crashes. So for some investors, the risk-adjusted returns might have looked better for gold over certain recent periods.
So a solid case for gold. But what about the Bitcoin side of the debate in CoinSitter?
They definitely present the counter-arguments. One point is simply market size. Bitcoin's total market value is still much smaller than gold's.
Which means more room to grow, potentially.
Yeah, exactly. More upside potential in percentage terms, theoretically. And then there's institutional adoption. That's been a huge narrative for Bitcoin.
Right, the ETFs, big asset managers getting involved.
Yeah, they mentioned sovereign wealth funds, reportedly like Abu Dhabi, dipping their toes in. Big names like BlackRock, apparently recommending small allocations, maybe 1–2% to clients.
And the Bitcoin ETFs themselves have grown incredibly fast, right?
Massively. Faster inflows in some cases than comparable gold ETFs saw after they launched. So big money is definitely moving into the Bitcoin space.
Does CoinSitter think gold's rally might be running out of steam?
They raise that possibility, yeah. They look back at previous big gold bull runs, like around 2008 or 2011, and note that they were often followed by pretty significant corrections.
So maybe gold is getting a bit euphoric now?
Could be. They sense maybe some frothiness in the gold market sentiment, which could mean it's closer to a peak than a bottom, potentially making Bitcoin look more attractive from a timing perspective.
Okay. And fundamentally, what are Bitcoin's advantages over gold, according to this source?
The big ones are financial sovereignty. You truly control your keys, your coins, and censorship resistance.
Can't easily be frozen or seized if you hold it right.
Exactly. Plus ease of transfer globally and that built-in hard-coded scarcity, only 21 million Bitcoin ever.
Unlike gold, where we don't know exactly how much is left to mine.
Right. And interestingly, Bitcoin's current inflation rate, the rate at which new coins are created, is actually lower than gold's estimated supply increase rate right now.
Huh. Didn't know that.
Yeah. And historically, during market recoveries, Bitcoin has tended to bounce back much stronger and deliver higher returns than gold.
So lots to weigh up there. What was the final take from CoinSater? Did they pick a winner for 2025?
Well, the host offered a kind of personal opinion at the end. They leaned towards gold maybe being favored in the very short term, mostly because of trade war uncertainties and its safe haven status.
The longer term.
Longer term, or if the Fed starts easing monetary policy again, they seem to lean more towards Bitcoin, especially highlighting that institutional adoption trend and even mentioning the Trump family's reported Bitcoin holdings as a sign of its growing acceptance.
Ready to tackle silver with Rotaruda.
Let's get into it. Bixweir at Rotaruda is very passionate about silver.
I gathered that. What's his core argument?
His main thesis is that silver's price has been deliberately suppressed for, he claims, 170 years. And because of this, he believes it's just massively undervalued right now. His view is that eventually people will understand this alleged historical suppression and the price will reflect its true value.
What drives that value in his view, besides just monetary history?
A huge part of his argument is industrial demand.
Mhm.
Silver is absolutely essential in things like solar panels, electric vehicles, critical modern technologies.
Right, it's highly conductive.
Exactly. And he suggests manufacturers are actually aware that it could become incredibly scarce, almost calling it unobtainium. He also points to what's happening on the COMEX, the commodities exchange. He highlights record levels of physical silver being demanded for delivery.
People wanting the actual metal, not just paper contracts.
Precisely. And he notes JP Morgan's large role in these deliveries, suggesting the whole physical delivery mechanism might be under serious strain.
He mentioned history too, right? The suppression angle.
Yeah, he goes back into U.S. history, talking about the demonetization of silver, the crime of 1873, and the later move to the gold standard.
How does that connect?
Well, it's tied into his broader theory. He even posits this idea that there might be huge hidden gold reserves, like maybe in the Grand Canyon, that couldn't be revealed during the gold standard era because it would have caused chaos by devaluing the known gold supply.
Yeah.
It's quite a theory.
Definitely unconventional. How does he link this to today's money?
He connects it directly to the fiat currency system. He references Elon Musk's magic money computer comment about money printing.
The idea that governments can just create money out of thin air.
Exactly. This fits into his road to Ruta theory,
Yeah.
which basically argues that this printing of unbacked currency will just keep going until there's some kind of discovery or event that causes the whole system to collapse.
And how would that affect silver, in his view?
He speculates that if people suddenly realized how much more fiat currency actually exists compared to official figures, it would massively revalue precious metals, especially silver relative to gold. He talks about the gold-silver ratio potentially plummeting, maybe even towards 1-to-1, or he even throws out 1-to-100, meaning silver becoming more valuable than gold.
Silver more valuable than gold, that would be a paradigm shift.
The massive one. And he believes silver is the key. He points to huge short positions held by big banks like JP Morgan and HSBC in the silver market.
Banks betting on the price staying low or going down.
Right. And he thinks these short positions are a major vulnerability. If the silver price explodes upwards, it could potentially bankrupt these institutions. He believes we'll eventually return to constitutional money, gold and silver, with its value set by the market, by the people, not by central banks.
Does he mention Bitcoin in this future?
He touches on it, suggesting that assets could be reallocated, maybe even including Bitcoin held by governments, as part of this shift back to gold and silver.
And does he see this as just a U.S. thing or global?
Global. He mentions other countries, like England, supposedly storing gold and silver, preparing for some kind of major financial reset.
Okay. So what's his final message, his call to action?
It's pretty clear. Explore his road to Ruta theory, understand this alleged history of suppression, and most importantly, acquire physical silver.
Any specific kind?
He particularly likes pre-1965 U.S. silver coins, dimes, quarters, half dollars, arguing they are a recognizable form of silver that could easily become money again. He even suggests blockchain could potentially be used to track this kind of silver coinage in the future.
Wow. Okay. That is definitely a different perspective than the others.
Very different. Very focused on silver as the ultimate play.
So we've really covered a lot of ground here. We've gone from Bitcoin as this, potentially disruptive digital asset
Right, focused on its appreciation potential and sovereignty.
to gold as the more traditional, stable safe haven, especially when things feel uncertain.
With central banks buying and long history.
And then silver presented as this, potentially explosive asset due to massive industrial demand and this idea of correcting historical undervaluation.
Yeah, 3 very distinct cases being made. Well, thanks for joining us on this deep dive today.